Welcome to Telltales, an investing podcast hosted by Hunt Lawrence, Jason Wallace, and Mike Nicoletti. Each week, we discuss topics ranging from geopolitics and macroeconomics to energy and technology. You can sign up for our newsletter at telltales.us. That's TELLTALES.us for additional data and content you can use to follow along. The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Some of you on the phone may be familiar with a program that Byron Wien did for many years, just deceased, where he came up with 10 things that he thought were kind of not likely to happen, but might happen. 10 surprises, he called it. He died earlier in 23. And Michael Cembalest, who is a senior investment person at JP Morgan, in Byron's memory, and to keep the tradition up, did his own 10 surprises just about a week ago. One of his surprises, and I saw an article about it, I didn't see the actual publication, but one of his surprises was that, to give you a sense for how Byron did it or how Michael Cembalest is doing it to follow on, keep it alive, was that Biden, sometime after Super Tuesday, which is in March, where I think a lot of the southeastern states elect their delegates, sometime after Super Tuesday and the convention would step down because of health issues. I guess we'd have an open convention then with no delegates pledged to anyone. So it'd be like something from 100 years ago. So in that spirit, I'm going to start on Exhibit C, which is oil. And right at the present time, it looks pretty darn oversupplied. And the price of oil, which is holding in the low 70s, has, at this point, despite all the Houthi activity in the Red Sea, I think has more downside than upside, because Saudi Arabia, which is here at 9.3, but I believe for 24, I think their production is running under 9, has in the past, when they've become upset about people overproducing, done market share. Now, last weekend, they changed some differentials for oil going to Asia, to China and other places in Asia, reducing the differentials from whatever index they're using. That's not a good sign. I'm sure between myself and Mike and Jason, we're going to have more than 10 surprises when we finish the 30 minutes. But one of the surprises that, and a surprise by definition isn't a prediction, but hey, here's something that might happen. If we turn to Exhibit B, natural gas just in complete oversupply, and the hope here, or the gas bulls, or the people like myself who think gas will eventually move back to the $4 range. Think of it. I mean, look on that page. Gas average 270 in 2019, 220 in 2020, COVID and whatnot, 370 in 21, $6 last year, and 280 this coming year. And the strip for 24 as of last Thursday was 285. Now, the key is to have that supply increase calm down. If you look at the production in 2019, it was 88.5 B's a day dry gas, and then 89.9 in 20. Obviously, 20 reduced by having very low prices, and then 91.3 in 21. So you had a pretty good bounce. But as you got into 2022, went from 91.3 to 95.5. And then the next year, 23, the year just finished, 101.8. And then we hoped that with gas at 280, it would flatten out in that 102 range. But no, it's already at the end of the year running 104. So to get to that $4 gas level, at least part of the way back, or at least get back to where it was in 23, you have to have a slowdown in supply. On the demand side, residential commercial is flat, has been flat, industrial's flat. Power, fortunately, has been up a couple of Bs a day per year. What's happening there is that wind and solar are taking an increasing part of power supply, but they're variable. The wind isn't blowing, you need the gas. If you need power at night, unless you have batteries, you need the gas. So there is some increased gas demand, which was not predicted. It's very fortunate. The key is LNG, which, again, if you look at the chart, was like 6 Bs a day in 2019, 7 in 22, 10.7 in 21, 11.8. So it's been building up. But there's 27 Bs of LNG capacity under construction in the U.S. These are very complicated facilities and expensive facilities to build. But in time, that 15 Bs predicted for 24 will get to 27. Now that is important, and there's many other. The whole idea here is to replace the gas that Europe no longer brings from Russia with LNG from the U.S. Here's a bad surprise. Unfortunately, I had a bad surprise for oil if Saudi goes to market share. A bad surprise is that when you start a new LNG project, this doesn't affect the 27 Bs that's under construction, but if you're starting new ones, you have to get an initial approval from the Department of Energy. The Biden administration is considering directing the Department of Energy to not issue any more new initial permits for LNG projects under the theory that LNG is fossil fuel. And they're getting ready to contest an election for president. And I think that in the next couple of months, they're going to get to a position which will help their base, I guess, that new LNG projects should not receive that initial permitting. That's a bad surprise. Not a prediction, but a surprise. On Exhibit A, which is a cash flow statement for the government, it's out of date because the CBO hasn't come out with more numbers, and the U.S. Treasury hasn't come out with more numbers. But this deficit is not sustainable. It doesn't seem to bother the bond market. The 10-year bond was at 5%. It's now getting to 4%. You can't maintain a high 10-year rate with low Fed funds rate. So to the extent the Fed funds rate comes down, which everyone's predicting in 24, people will purchase large amounts of treasuries on credit and finance it in the Fed funds market. So two predictions here, or two surprises. One, that there'll be some problem with that Fed funds market, which will cause the Federal Reserve to come to the rescue. When the Federal Reserve comes to the rescue, the decline in rates and suspension of quantitative tightening will happen. And so while the bond market, the equity markets look pretty calm now. Now, what causes bond auctions to get, chaos to develop? What chaos is if the Fed funds rate starts to run up and be much higher than other short-term rates. That means whoever is funding the inventory can't replace their debt because this debt is done on an overnight basis. It's basically a repo market. What can cause that in a bond auction, U.S. Treasury bond auction? Lack of final demand, so the dealers have to buy more, and the dealers get stretched trying to finance that inventory. I can't remember. I think Michael Cembalest had this as one of their bad surprises, if that's something that Byron Wien would have had on his list. So there we are. We're through A, B, and C, and I think we've accumulated 4 or 5 potential bad surprises. So we're going to go to the front part of the memo now, which leads off with Apple, Alphabet, and Tesla, and then gets into the software companies and chip companies. And we're going to rely on Michael first, Jason second, to give us things on 10 surprises that would be positive. And I guess the first one to lead off with is, this would be a happy surprise for Alphabet if their trial results in their not being able to send $20 billion to Apple in return for being the default search engine on all iPhones. That would be good for Alphabet. Not necessarily so good for Apple, but definitely something that you don't want to make a prediction, but probably belongs on that 10 surprise list. But over to Michael for his commentary.
Well, that one's interesting because nobody really knows what the downstream effects of that would be. They have a baseline based on what happened with Apple Maps back in, I call it like 2011, or I think it was around 2011, which has them spooked, which is why they're happy to pay that amount. So if they didn't have to pay it, the worry would be they would lose a lot of customers. The other ones on that page that are interesting for positive surprises, or maybe negative surprises, would be Apple, is if they implement an edge model in their phone that they make available to developers for making apps. I think that will happen. It'll be a positive surprise if it happens this year. It'll be a negative surprise if it does not happen this year. Tesla, I would say the positive surprise would be that the autopilot is greenlit by Department of Transportation. The reality is that maybe it'll take an administration change for that to happen.
I've got an easier positive surprise for Tesla. I think they'll have a new in-car operating system for the driver that is language model based, and you'll control your entire vehicle through speech. So even though they are trying to go to autopilot, you won't have to take your hands off the wheel to control any function in the car.
Oh, that would be cool.
How much would that add to your Model 3 price, do you think, to get that software?
I'm going to throw it out there. You could reduce your cost. It would, obviously it's going to cost money to develop it, but imagine that you could have maybe less screens and less buttons and all of that. So maybe you can reduce some hardware parts.
Right, and I think I suspect it could be an over-the-air update, since all most of the Teslas have the hardware necessary, I suspect, to run something like that.
Think about it. That all the way back in 2016, the Teslas had Nvidia GPUs on board. So
yeah, multiple.
There's a lot of hardware floating around on each one of those cars.
Well, we're not even halfway through. Well, we are more than halfway through the 30 minutes. We have, I think I've counted 6 surprises. Can I ask a question about Nvidia announcing that they have chips, or will have chips, that will fit in your laptop, or possibly in your iPhone? Is that going to be a significant part? Here, Nvidia is on page 3. If Nvidia can do 80 billion of revenues in 24, and let's say they're able to continue that in 25, give another bit of time. I mean, is that, I guess this is to Jason, is that as much as a several billion-dollar market, do you think, for Nvidia by 25 or 26?
I would tend to think that it's not. Their focus is on these high electricity consuming, very powerful GPUs. They have made a line of smaller kind of Raspberry Pi, I believe they're called Jetson GPUs, to run small algorithms, so that they have a little bit of experience in that. But I think the handset manufacturers are deeply integrated with, the Qualcomms of the world, and to produce chips that are very energy efficient and tailored to their handsets. So I think that might be a long, if they were to pursue that might be a couple year out process.
Back to surprises. So I'm all the way over on page 4 already. There was so much publicity for 5G. And when we get over on to page 5 and 6, the investment in 5G by AT&T, Verizon, T-Mobile has to be earning either a very low return or no return. Is there a set of circumstances where the investment by Microsoft and others in providing artificial intelligence programs to everyone, the public, to specialized use, is there any potential to run a couple of years and have the take-up be disappointing like the take-up has been for 5G?
I don't think so. We're seeing a lot of take-up already from a lot of the software companies. And if you look at software development, they were the first adopters of this AI technologies, the latest ones. And essentially the first tools were built for software engineers by software engineers. And this is the year we're starting to see a lot of productivity gains in that field by using these tools. And then by extension, I think in the next year or two, we're going to see a lot of the productivity gains in probably sales and marketing departments, more functions that are automated or repetitive.
Yeah, no, I'll throw an additional surprise out there that's related to AI. A surprise positive one would be the first, I'm fairly certain this hasn't happened yet, but the first computer-aided drug discovery candidate will get FDA approval this year. And it's probably too early, but it would be a surprise if it happened this year. And the big takeaway for me, I'm in San Francisco right now for the JP Morgan Healthcare Conference. The Nvidia presentation was standing room only, people packed in like sardines to hear them talk about essentially computer-aided drug discovery. There's another presentation there from another company called Recursion Pharmaceuticals that seems to be the leader in this. You have some validating actions by some of the larger pharmaceutical players, like Amgen is committed to building a big NVIDIA supercomputer. So this whole industry is going to move, if things play out right, it will move from to much higher probability candidates going through the actual expensive and arduous regulatory clinical trials. That part should come through with higher probabilities of success. So it's based on simulating the biology and the chemistry that happens within the body. So it's pretty cool, and it's going to completely change this industry in particular.
I think another industry that I don't know if it's a positive or a negative surprise, depending who you are, but social media will be changed through AI this coming year, in that maybe the job of being an influencer will go away. I think we're seeing generative AI, replace these influencers, the early stages of that. They're replacing influencers, and brands will probably like a marketing department controlled person, or person in quotes, rather than a real person that can get into trouble representing their brand, and it'd be a lot cheaper.
Interesting.
It's really interesting, considering the number one desired profession for young people these days is influencer. So it'd be quite disappointing for a lot of people.
Yeah.
Right.
Maybe astronaut can come back on the list.
Yeah, that'd be nice.
Yeah. What else do you see, Mike, in like when you and Jason get on the phone, what else do you see in the health conference? It seems interesting.
Radiopharmaceuticals has got a much more, it was sort of an obscure part of the pharmaceutical industry. And in recent weeks, there's been a number of big deals announced. Bristol Myers Squibb, who that company is facing patent cliff on a number of very large products. And they went out and bought a company called Rise Bio. They're in the radiopharmaceutical space, relatively early stage, but it's a signal that stuff's happening in this market, and they're starting to take the radiopharmaceutical market more seriously. The second one is Point Biopharma getting acquired by Lilly, or the intent to acquire. That's another big deal. So you now have two major pharma companies that have made moves in the space, and kind of expect to see more of it. And the third one is Lantheus, which we're obviously fairly partial to, who they did another deal to license an isotope. So they now have quite the portfolio, and they're the only, I think they might be the only radiopharmaceutical company that really has like a broad portfolio approach to the category. Everybody else is kind of going after one particular isotope and trying to apply it everywhere. So I like the strategy, and I think in general we'll probably see more use of radiopharmaceuticals as better ways to treat specifically cancers. And then the second piece is diagnostics. They think that there's more opportunity for diagnostics as well.
Right. What about other people trying to compete with Vertex, Vertex Pharmaceutical, if it's able to get its pain medication approved? As I understand it, that the technology that's being used here has been, worked on by other people, but the problem is, do you have side effects, or if I misstated that, Jason?
No, I mean it companies have been working on this for decades, all unsuccessfully up until Vertex did it recently. A couple of reasons they were unsuccessful: they either had really bad side effects, and that caused the discontinuation of the studies before they even got efficacy data. Other times, the efficacy data wasn't positive. And I think one of the big reasons that has stuck out to me that they weren't successful in the past is they were targeting one of the nerve channels that in mouse models, it is the primary one that carries the pain signal. In humans, it happens to be the nerve channel directly next to that. So it's different between the mice and us. And when you're in your preclinical research stages, you're basing all your decisions off of what the mouse model told you. So it kind of went down the wrong path. And I don't know exactly what triggered Vertex to look at the 1.8 channel, but they did, and having successful results with that. And due to that, until recently, and the results were being published, none of the competitors were looking in that direction. So we've searched through the published database of clinical trials, and we don't see anyone else doing the exact same type of research that Vertex was doing. So we feel pretty confident that they have quite the lead. Certainly, if it's effective, people are looking at it now. But
I'd say there's people looking, but not as far along. Right. And remember, in previous years, when opioids were still, I guess, palatable, how are you going to compete against an opioid? So I think there's fortunately been industry-wide and socially, population-wide, wanting some alternative to opioids. So
absolutely, yeah. A smaller biotech released an opioid, I want to say last year, and it flopped. And they recently sold the rights to it away for, pennies on the dollar of what the research cost.
This episode of Telltales is brought to you by Topmark Capital. If you're a qualified investor who's looking for an innovative, emerging manager, visit topmarkcapital.com to learn more. This is not an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. And now, back to the show.
I have another surprise to throw in here that I think is something to keep an eye on, and what Jason was just talking about as far as the mouse models and the animal models that drug testing goes through before it goes into human. Another surprise could be that the FDA will accept data from in silico experiments, meaning computer modeled experiments of the biology and chemistry, simulated to be with the way it would react within a human body, and use those to allow and enable them to proceed into an in-human study, as opposed to having to do the animal studies. And the reason that's important is that it's not just these pain studies where things are different from the animal model to the human model. There's actually quite a few things, and it's well documented and well understood. But because that's the way we've always done things, it's a barrier to some types of drug and treatment developments.
Well, in closing, I'm happy we came up with some good surprises. And I apologize to Mike and Jason and everyone on the phone for not being able to come up with good surprises for oil, gas, or coping with our deficit. But I think what this is illustrative of is that cash flow, free cash flow after CapEx, is basically with the companies that are making these new developments, especially if they can do it within cash flow. And we can't necessarily predict that this coming year will have 7 stocks, the Magnificent Seven, lead the charge. But I think what we can say over an extended period of time, half a decade or more, that if there's going to be upside, it will be where the new developments are happening, and especially where they can be done out of free cash flow. And with that, the three of us had a good time doing our who's going to have the highest percentage increase in free cash flow. And we're going to replicate that now 4 times a year. We'll do it on May 1 at the end of the first quarter, and then July 1, and then October 1. I think what we'll do, because I do think this looking for surprises, good or bad, is really an important part of the investment process. I think we'll try to do this quarterly as well. And Mike will at least inform Jason and myself where we thought there were bad surprises and good surprises. So when we do this, the second meeting of the second Wednesday of the second quarter, we will recapitulate how we've done on the bad and good surprises, and then modify them or add ones, and try to do that 4 times a year. I think it's a good thing to do as part of the investment process. With that, everyone stay healthy and stay well, and we'll talk next Wednesday. Take care.
Thank you for joining us this week. Please tune in again next week as we will be back on Wednesday. As a reminder, nothing on this podcast should be considered investment advice. You should always do your own work to determine if an investment is suitable for you. The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security, nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.